going to have my play George's recording, and after my play George's recording, we're going to come back and we're going to hear from Alexis on fundamentals. George, we're talking price action. We're having some issues with Geoff's recording, so we do need to get to George if you can, Mike. You okay to play George's recording, Mike?
Hey, trading buddies, I trust you all well. Ash, I don't know, I can't remember how far you live off the coast, man. So please excuse me if you're right next to it. But Geoff, this probably won't mean much to you. But we took a few days out of busy Johannesburg just to come out to the ocean. And these are just the views. Today is pretty cloud covered, but it's our last day. We've had a beautiful 4 days. So that's where I'm doing my recording from. But I'm gonna switch off the video just after sharing the screen so that we don't distract the guys. And let's have a look at just a couple of things that I wanna discuss very quickly. So here's a few things that I look at. And typically, you know, I don't talk much about these things because it just happens at the back of my mind. But I was just thinking about what to share today, and I think it's very important. I talk a lot about looking at the low of yesterday, the high of yesterday, looking at, you know, you got to set these key levels in if you're trading intraday, like I do. Open of the day, or open of the day must always be in there. But there's something else which is always at the back of my mind before I start the trading day. And I'm always looking at where price action is on the daily in relation to the 10 EMA, that's an indicator of breakout strength for me, and also the 20 EMA, pretty key level of support or resistance. But specific for today, I wanna just suggest to you guys that you really learn or force yourself to look at the 3 days before yesterday. So before the previous day, the 3 days before, it just focuses you on the market and looking at what's actually been taking place in the market. So here are the 3 days before yesterday, that inside candle, bull candle, bull candle. Now, clearly you can see the market was in a pullback. We got within those last 3 days to the 10 EMA, failed to close above, got an inside candle, good for the bears, but the bears failed to put a low to close on or near the low, which is an indicator of strength. Inside candle would have been a good breakout candle, breakout pattern for the bears. But then the day after, despite the weakness shown by the bears, that's yesterday, we then had a trading range. So coming in today with that 3 days prior to the previous day, having a look at it, you gotta be expecting that this trading range is pretty strong. So any breakout above it, you can look for a failed breakout above it and pull back into the trading range, which you can trade back in the trading range. The bears reassert themselves because we are this low and that they failed to close beneath, give us a low close on this day. We also look for a failed breakout and a pull back to the trading range. However, if the bulls are strong, you're going to think of measured moves, right? Measured move above the trading range, which comes to test this level here, which is high of 2021. That's an area to look for shorts. Or if the bears are strong and they now give us a close to a measured move, then we can start to say, hang on a second, possible double bottom. Let's see if we can come back up, or if the bears are strong, acceleration down. So that's on the UK 100. Another interesting one to look at for the session today. Again, same kind of thinking that I'm trying to emphasize. There is previous day, yesterday, low of the day, but also we are in the zone of the high of 2021. So pretty strong level of support. We also have the high of yesterday, but let's look at the 3 days before yesterday. 2-bar reversal took place, so indicates pretty strong level of resistance here. Bears had a chance at that time to come and at the test of the close, test of the 10 EMA, give us a close somewhere beneath there. And if they were strong beneath this level of support, which was high of 2021. But they failed to do that. And if you look at the price action above the 10 EMA, so all the selling we're talking of has turned out to be bears taking profit, because the bears are failing to put a close beneath the 10 EMA. So if you look at these last 3 candles, it suggests for us that the market might just bounce off here. It might give us a double bottom and attempt to break beneath this today. But there is still opportunity for the bulls to break above here, but they're only going far as a level of resistance. But if you're trading intraday, if we get that breakout, good enough profit opportunities for you. Last one, very quickly, same kind of thinking, very interesting on the euro. So this is yesterday, good bounce off the 10 EMA, good for the bears. But let's look at the 3 candles, 3 days before we got to yesterday. So the market pulled back. Yes, it did. Got to the 10 EMA, had a close above the 10 EMA. So this is the indicator of strength. So bulls had the opportunity to close strongly to give us a follow through above that and get to the 10 EMA. They did give us that, but they bounced off the 10 EMA, which indicates that the bears are still strong in the market, and that reversal very good for the bears, follow through good for the bears. So today, if you're in the market on euro, you gotta be looking 60% chance. I'm 100% right 60% of the time. 60% chance that the bears will break beneath this low. And if they do, what are they looking for? They're looking to close beneath this previous low, which was when the market turned and pulled back and was profit taking. But also, if you look at this Fibonacci expansion, leg 1, pull back to the top of the pullback. So it could be a little bit more precise. If you wanted, just plonk it there. First leg, pull back, perfect low 1, first pullback after this breakout, absolutely perfect for you to look at. And of course, we got triggered in, but they're looking for low 1, leg 1, pull back, leg 2. So there is the goal for the bears, an extension of that first leg, equidistant extension. But they also would like to close beneath the measured move of February's trading range breakout. So if you go to the month of February trading range, okay, so the bears are strong. Yes, they break beneath that, but they have to close beneath the measured move of the trading range to give us indication of continued strength going forward. So guys, I think that kind of thinking yesterday, of course, but then 3 candles before will give you opportunities and you know where your certainty should lie. So hope you enjoyed that. We will catch up with you on Wednesday, live trading profits, which is 11:30 GMT on Wednesdays. But also, if you have subscribed to my Wednesdays at the market, free one, second Wednesdays,
now if you want to mind.
Thursday and fourth.
Cheers. Look, everyone, we've had a couple of issues today with videos. It's very rare for us to have these issues, but both Geoff and George's original videos, both George and Geoff's original videos haven't come through well. George asked us to play that one instead, which we've done. Geoff is out this evening. I sent a video earlier, and we got it. I just won't play. Won't play on my system. Won't play on my system.